Well, let's turn our attention to the real estate space then. We have Mr. Irfan Razack, the CMD of Prestige Group, who joins us to discuss the real estate sector's expectations from Budget 2026 and also brief us on the demand trends. Hi, Mr. Razack. Good morning. Always good to speak to you, sir. Well, in the past, you've said, right, that overpriced products, they struggle a little bit. Are you seeing any signs of price resistance in some of your key markets like Mumbai or Bengaluru?
Good morning. I have always said this, I'll repeat it again, that if price goes up too fast, too high, then there has to be a little bit of a struggle. We at Prestige have kept it at a very, very comfortable level. So we don't feel that pinch. And we definitely want to make sure that we make two ends meet. We don't, the only reason why the price goes up is you get too optimistic and you would make wrong deals. And you tie up land at very high numbers and then unable to sell it at a competitive price. Because we definitely do have to look at our bottom line also. I think keeping all that in mind, I believe that even at these levels, there should be no stress. And from here on, if we can stabilize, it'll be good for us.
All right. So you're saying as of now, we're not seeing price resistance and demand is as good as you expected?
Yes, demand is good. You see, now for me, the parameter is when we do a brand new launch, in the first month of launch, if I'm able to sell between 30 to 50% of the inventory, that's when I would say the demand is still there and there's nothing to worry. But if I do a big launch and then there's a large amount of inventory and I'm just able to sell between 8 and 10% of the inventory, then there is something going wrong somewhere and we need to really wake up and start thinking what happens. So I think that situation is still not come. And I hope it never comes because we are quite sensitive to what we are doing.
Mr. Razack, good morning. Thanks very much for joining us. I'm sorry, I think you've given us an answer, but maybe one more before we move on to other things. Any views, sir, at all on the NCR market specifically? I mean, that is, at least in the last 20 years, that is the market which goes into a frenzy, and then it's also the first to start to, because there's so much speculative activity as opposed to, say, a market like Bangalore or Mumbai. How's the situation there, sir?
Yeah, I'm a newbie in NCR. We've just done one development, one project we launched, and to our luck, and I believe we positioned the project right, and we priced it correct, and we had a runaway success there. Now we have tied up a few properties which will come into the market shortly as and when the approvals come and as and when the due diligence and all that is tied up. We are quite aware that there's no sense in being over-optimistic, overpricing the product, and then not finding a buyer. Like you very rightly said, that is a market that we need to watch. And we should avoid speculators. Like in our first project, that is the Prestige City Indrapuram, we completely avoided the investors. There were many people who wanted to do bulk sales. We only sold individual customers, and I think that's the strength of the project itself. So we are very safe on that, and hopefully, as we go along, let us see how things pan out.
Sir, any early indications of what FY27 might be for the company in terms of launches, in terms of a pre-sales guidance? How would it compare with FY26?
The FY26 itself, we believe that we'll end up in a high. Yeah. We've already crossed that 22K mark, and we should, the teams say that they will take us to about 30K, which I believe is very possible and which will happen. But now, if I reach that number in FY26, obviously FY27, we have to plan hard, we have to work hard to see that we at least stabilize there or maybe grow from there. There's a lot of inventory in the pipeline. It's only a question of how quickly we can bring that inventory, where we can bring the inventory, which geography, and which micro market. So that is, the teams are at it all the time. It's like a complete, pressure cooker situation. And we are, I think we've learned how to work with pressure. And I believe that if all things being equal, we should do better in 27 than in 26. Though
Okay.
we've done fantastically well in 26.
Okay, all right. Mr. Razack, the next big cue is going to be in the next 48 hours, Budget 2026. Give us your top 3 expectations that you have from this budget.
As far as real estate is concerned, on the budget itself, I don't think anything's going to happen. Honestly, there's no expectations at all. But the one that we have been working with the finance ministry, with the GST sources, is two top things. If that changes, I think the first point which you brought up, where the prices have gone up very high, is today we don't get the input credit on GST, and then the price cost just has gone up mindlessly by 18% without knowing. It's a silent killer. And then over and above that, the customer does have to pay a 5% GST on their product. So that has to be necessarily passed on to the customer. That adds to the cost. So but of course, this is not going to happen in the budget, but that is what we've been talking of. And then there's another pain point is there's some misunderstanding on this commercial property. And on joint development of commercial property, there is a GST when you straight away sign an agreement, which again is unfair. We've been talking through various associations on this. Hopefully, some sense will come, and we are just asking for justice and equity, where it's not going to be double taxation. If these two corrections happen for the real estate, it will help. I think in all other respects, I think whatever had to be done for real estate has been done. I don't think we need any more SOPs. All we need is a level playing field, what we call early approvals, which are nothing to do with, again, central government. It's all supposed to do with the local governments. If that happens, I think we can still keep doing business. After all, this sector churns the economy like no other. We support more than 200 plus ancillary industries. And as long as this sector is robust, employment, labor, all that will keep happening. That will keep churning the economy. I think that's the only thing that needs to be recognized. At least if we are recognized, that's all the satisfaction we get.
Absolutely. Mr. Razack, we'll leave it there, sir. And we'll speak again. We request you to come back after the budget. Thank you for joining us for now. Appreciate it.